Now, there was a very good moment. We really saw how the New York Stock Exchange can poke fun at themselves and perhaps not take themselves too seriously. It started with a red flag at the start of the Spotify day. Now, look at the picture closely. The stock exchange put up the Swiss flag to welcome Spotify to the New York Exchange. It got the country wrong, though. Spotify is, in fact, Swedish. Now, they fixed the error quite quickly later in the day and even managed to poke fun at themselves, saying it was a momentary ode to our neutrality in the process of price discovery. If that's not turning lemons into lemonade, I don't know what is. Earlier, I spoke to Stacey Cunningham, the Chief Operating Officer at the New York Stock Exchange, about why Spotify chose this unconventional way of coming to the market.
For a company that's accessing the public markets, they have a couple of different reasons why they might do that. For some of them, it's about capital raise. For some, it's about the brand and raising their visibility so they can continue to grow. For others, it's about a liquidity event, providing currency back to their existing shareholders and also a currency that they can use for future M&A. For Spotify, it wasn't about those first two. They didn't need capital and they didn't need that branded visibility, but they did want to access the public markets. So they saw the value there and they felt this was the best mechanism for them.
They also didn't want to do any of the dog and pony. I mean, there was no ringing of the opening bell. The CEO isn't even here. You're disappointed because I know you're sort of, again, agnostic to an extent, but it is nice to have an event.
This is an event. I mean, this is certainly, if you talk about the marketing value of a company coming to the public markets, the fact that our market model shines during the price discovery process and it's unparalleled value, there's no better marketing event than what we're looking at right now. So no, we're not disappointed. It was never about the pomp and circumstance for Spotify. We've been working with them for 2 years, and that was never their driver.
Would you, again, I know you're agnostic, but these sort of listings are they can be extremely volatile. They involve an enormous amount of greater risk than a straightforward IPO with an underwriter underneath it and a book building. Because what's happening at the moment is literally they're building the book between sellers and buyers. Would you recommend this as being...
Well, I certainly would never recommend the right path for each company, but we're going to present to them what is available out there. And when you talk about volatility, we hit volatile events in the markets all the time. The markets are not immune to volatility. Our mechanisms that we put in place to prioritize price discovery, to take the time to find an equilibrium price, and to be ready for when there is volatility in the market, that's what we do every day. And this is what we'll see today.
The fascinating part about it is it doesn't matter where you might want to buy Spotify shares. It doesn't matter which country you're watching us in, anywhere in the world. All that matters is really, in this computer age, a man on a phone, two men or women on a phone, talking and finding out prices.
Yeah, and this is why the human element has continued to be so important to the New York Stock Exchange market model, because you can't ever replace that. You can certainly automate things, but this is why we see real value in that price discovery process, and we keep humans part of that conversation.